You might have noticed a lot of headlines recently about house prices falling. Earlier this week, property data company CoreLogic told us that the Australian housing market had experienced its sharpest drop on record. That sounds pretty significant. So just how big a deal is it? How much longer will it go on, and what does it mean for you? I'll try to answer all of those questions in the next few minutes. First though, let's take a closer look at the drop itself, and we can start by looking at prices over the last year. If we go back to January last year, we'll see that prices rose a little bit at first, peaking in May, but then they started to fall. And it looks like they've fallen a fair way. They are now more than 8% below that May peak. To give you some idea of what 8% means, if a $1 million house lost 8% of its price, it would have lost $80,000. So that's not nothing. But when we zoom out to look at house prices over the last 20 years, we get a very different picture. You can still see the change, but you might have to squint a little bit. Over this time horizon, our drop starts to look a little bit more like a drop in the ocean. To add some more context, let's have a look at what's happened to wages over this same period. This picture right here is the heart of what many people call Australia's housing affordability crisis. What these two lines mean is that over this period of time, Australians have been paying more and more of their incomes on housing. That's something that's happened elsewhere in the world too, but it is unusually bad here. And that's really important context for understanding what's happening today. House prices would need to fall a long way before we get back to the housing affordability of a generation ago. But let's come back to today. Why are house prices falling? The short answer is interest rates. Higher interest rates, like we've had in the last year or so, push up the price of repaying your house, but they can push down the actual house price. Think of it this way. Higher monthly mortgage repayments will push more people over the edge to the point where they can no longer afford to pay for their house. That'll push them to sell it, and more people selling their houses can result in a lower price. The same logic applies to prospective buyers. If you're faced with higher monthly repayments after you buy, then you may not be able to afford a house as expensive as you could before. And when the price that people are willing to pay falls, then the house price can fall. So that's how interest rates can push down house prices, essentially by putting more people under financial strain. But if you've had a conversation recently with someone who bought their house in the early 1990s, maybe your parents, they might tell you that the interest rates of today are nothing compared to what they went through. And it's true. Interest rates today are about 3%. But back in 1990, they were nearly 20%. So did they have it tougher than we do? Well, it's a little bit more complicated than that. It all comes back to the housing affordability problem. The interest rate might be lower, but because the size of people's home loans is so much bigger, and such a bigger percentage of what we earn, it makes it just as big a burden, and one that might get even worse if the problem continues. If you bought a house recently and you're on a variable mortgage, you probably know this already. You may be paying hundreds of dollars more a month for your house than you were a year ago. But is there a silver lining in this for people who are looking to buy a house? After all, the house price is cheaper. Isn't that a good thing? Unfortunately, that's a little bit more complicated too. It comes back to the question of higher monthly repayments. If you're struggling to save up for a deposit for a house, it might be good news in that sense, but once you buy one, it's going to be more expensive. And of course, if you're renting in the meantime, all of this pressure on homeowners could well be flowing through to you in the form of higher rent, and that's a problem we expect to continue as well. None of this is very cheerful news, but it is why the housing market is shaping up to be one of the big stories of 2023, and something that I'm sure we'll be hearing a lot more about.